Hi, I'm Andrew Henderson, editor-at-large of Nomad where we share tips on finding more freedom, more opportunity, and a better lifestyle by looking beyond your own borders. I'm in Kuala Lumpur, and one topic I wanted to talk about was the idea of emerging market offshore banking. A lot of people have asked about the idea of earning higher interest rates. Thanks to crazy monetary policy in the West, especially in the U.S., you can't earn any money on your money right now. Interest rates, if you're lucky, you're 0.75%. You go to the bank, it's a few basis points. It's insulting. And so there are places outside of the United States where you can get much higher interest rates. We've talked about, other sites have talked about, Mongolia is one of those options where interest rates are as high as 15% in local currency. But you need to be careful. Now, there are a couple different things to consider when you're looking at putting your money in a term deposit offshore. Typically, these term deposits go from 1 month to 5 years, just like what you might expect in your home country. 1 year is often the point where you're getting the most value for your interest. Anything longer than that doesn't often yield much better returns. Let's take Mongolia for an example. For a while, the Mongolian tugrik was, despite being very inflationary, was pretty consistent with the dollar at about 1,400 tugriks to the dollar. In the last several months, that has fallen about 20%, ending a period of relative stability. So that basically wiped out your entire interest for 1 year and then some. So you have to be very careful and you have to understand what it is that you're getting into. Now, Mongolian banks, interestingly enough, offer more liquidity than many Western banks. It's not hard to do, but it is obviously important to investigate the bank that you're dealing with, the jurisdiction you're dealing with. For example, if you want deposit insurance, that makes you feel comfortable. Is there deposit insurance, and for how much, and for which currencies will you be covered, as well as the actual currency you're banking in. You can bank in US dollars in Mongolia. It's not as beneficial to you, but it is still better than it would be in the West. But you do have to consider 15% versus 3% for the dollar versus no deposit insurance versus all the other factors at play. One country that people have talked a lot about, as have we at nomadcapitalist.com, is Georgia. I'm a big fan of Georgia, and I think we're going to be hearing more about them in the future. They are really a model of economic reform in Eastern Europe and in the world in general. And Georgian banks were paying 7 or 8% on US dollar deposits. Now it's down to about 5 for a 1-year term deposit. Thank you to the Fed for that. And they pay more on that on their local currency, the Georgian lari. I think that's a jurisdiction that's a bit more developed than a place like Mongolia. But it gives you an example of more developed emerging world versus frontier market in a place like Mongolia. Other markets people talk about, places like Russia, where now every bank pretty much is covered by the state-run deposit insurance program, as opposed to in the past when it was only the state-run spare bank, which basically had an unfair advantage. You want to go, for example, to a multinational bank, you can oftentimes open accounts in any number of countries they do business in. Bangladesh is one whom I was talking to some Bengalis just the other day. You can earn 10, 11, 12% in Bangladesh. You can earn 8 or 9% in Turkey, which is a country that I like, and some friends of mine that I was talking to lately also like Turkey. The Turkish lira has had its share of issues, but Turkey, I think, is moving in the right direction. So you can look abroad and find those better interest rates, but understand the three main components. What is the stability of the bank? Keep in mind that U.S. and Canadian banks oftentimes not that stable. In fact, U.S. banks a couple years ago were rated the 40th most stable in the world. Nothing much to gloat about. Also look at the stability of the jurisdiction. Personally, I think that the U.S. is a jurisdiction that is viewed as stable partially just because of its propaganda campaign and kind of the general perception rather than actual stability. But you also want to look at the currency. If you're not going to be banking in U.S. dollars, what is the deal with the Mongolian tugrik? Consider that in Ukraine, for example, the Ukrainian currency has long been predicted to be devalued by about 8%, and that was supposed to happen this year. It's probably going to happen next year. Now they're saying maybe it's 10, 11%. So that 16 to 18% interest rate you're earning on money held in Ukrainian currency in a Ukrainian bank is probably going to net out to closer to 6 or 7%. Plus any other risks that you would have involved, risk cost in that 6 or 7%. So those are the three factors that you want to consider. There are plenty of places that you want to bank. Obviously, you're not going to consider Argentina with inflation through the roof, Iran. I mean, you're not going to go to places like that where in some cases you can't even go. But countries that do offer higher returns can be worth your while, but understand what you're getting into. And also, if you're going to bank in US dollars or in euros or in whatever local currency that you use in these jurisdictions, make sure that that currency, if it matters to you, is insured under any insurance scheme. For example, in Singapore, which is hardly developing, but in Singapore, only Sing dollar deposits are insured up to 50,000 Singapore dollars. So if you held money in Singapore, for example, US dollars would not be insured in the event of a bank failure. Make sure that what you're doing is covered. So those are a couple tips on getting started with emerging market banking. If you have a sense of adventure, always do your due diligence first. Always do the research because unlike in the United States where other people can be held responsible, you're ultimately responsible for where you put your money in these up-and-coming places. Now, for more information on field reports from around the world, investing overseas, and other global information, go to nomadcapitalist.com.